Welcome back. So what did we remind us what we learned about the chances of a rate hike in December then from the minutes?
Well, I think the market reaction says it all, really. It was kind of interpreted as dovish, and it was dovish. But the reason is that it's not that the Fed changed its central view of what's going to happen to the economy. Its most likely guess hasn't changed, but the risks around it have changed. And if you're less confident of that projection coming to bear, then you're less likely to do anything.
Yeah, but the world changes, and therefore your assessment's going to change every month. If you want to raise rates, you need to raise rates. Of course things are going to change.
Well,
they're like a person that never gets married and never has a family because they're waiting for the perfect moment, the perfect person. It doesn't happen. Everyone compromises in the end, and they're refusing to do that. They're waiting for this, and now they want the dollar and the oil price and this and that, and next time they'll say something else.
David, I hope your family are not watching.
Yeah, I mean, don't worry about that.
Yeah, we were having conversation. David and I were having a conversation in the last hour, Jamie, where he referred to the Fed as the manana rate rise, and as his comment there suggests, he clearly doesn't think it's coming anytime soon. I mean, how many times have we seen people revising their expectations of when the Fed hikes this year, but going later and later and later, and now into 2016?
Yeah, I mean, it's been persistent, hasn't it? The thing is, we had a series of negative shocks, that one after the other. Now, they're not all related to one another, but that's what's happened. So that's why they changed their mind.
That's what happens in a deflationary world. I mean, that's the world we live in. The world we live in is that world. This is called snow ploughing, we call it in my profession. You take your forecast, you get in the snow plough, and you just push the forecast out. You don't change anything. You don't change your thinking. You never think you're wrong. You hop in the snow plough, you just push that snow along. And that's what everyone does every single month for 2 years nearly on the Fed rate hike.
Well, like, we're in a disinflationary world now, but the oil price is now, what is it, up?
Yeah, 50, just over 50.
Yeah. Whoopie,
well, I don't know. The point is that it's not falling anymore, right?
Isn't it? That's what we thought when it went back to 60.
Yeah, well, it's not falling, it's not halving anymore, is it? So the disinflation influence of oil will drop out. Inflation will pick up at the beginning of next year, especially in the UK, 1%, we think. So it will change, and the tone of discussion will change.
Is that one with lots of zeros behind it?
And it'll keep going.
Do you think?
How many times, how many years have we said that? Oh, inflation's going to pick up, we're going to normalise. This doesn't happen. Come on.
We'll see. I don't know if you're married or not, but I think there'll be some nuptials happening at some point.
So what else? What have we learned about the ECB in the last sort of 48 hours then, Jamie? Interesting that I saw UniCredit saying that they expect the ECB to announce QE2 early next year. I mean, call it QE2 or call it just an extension of the existing quantitative easing programme. We've been talking about it for a while. Is that likely? Have we learned anything about the prospects of that?
I don't think there's anything in the minutes that tells you anything more about what the ECB is going to do. The fact is there's lots of slack in the euro area. It's going to take a long time to get soaked up, and that's going to need more QE. So we think that'll happen next year as well.
You're happy with that?
I mean, come on. It's not that they can do more QE. It's what more QE can they do, and that's the key. And in that, they're constrained. They've made all themselves, as usual, a nice European knot, where they've got themselves in that if bonds fall below 20 basis points, they can't buy any, but the capital key says you have to buy 56% of German bonds. Well, how's that going to work?
So they want to do it, but they won't have anything to buy.
We're saying that, yeah, they're going to extend QE and they may increase monthly purchases, but they're struggling to buy what they said they're going to buy. They're not going to be able to keep the lid on euro-dollar. We've got euro-dollar going back up to 120 next year. And obviously the dollar bull run largely over. The Fed cycle is truncated. So the Fed was hawkish. The ECB was ultra dovish. The ECB is still dovish, but the Fed's not so hawkish. And that gap's closing. As that gap closes, causes euro-dollar to go upwards.